Hello guys and welcome back to the channel. So in this video I want to talk to you about Rocket Lab and how since Christmas we are down about 25% and the stock just seems to be falling and falling on whatever news. If it's good news we're falling, if it's bad news we're falling. So recently there's been a lot of news, and you know, when the stock is falling you want to reevaluate if your thesis is intact and if this was a good company or we need to sell or what's the deal. So in this video I want to review my Rocket Lab valuation model with you guys, and this is the same one that exists on Patreon if you want to support the channel. Also, if you become a channel member you get the same table, but just so you see that I don't want to charge money from you guys, you can join the membership, take the table, download it, and then you can cancel and I'll refund your money if that's what you want. Anyways, so let's begin this video. And please make sure that you're subscribed to the channel. So what are the news that I want to cover? So first of all, in my first Rocket Lab valuation model, I had some assumptions. And since then, there has been some changes. So one of the biggest changes is this covered cap convertible that Rocket Lab has issued. And I'm actually very, very happy with this capital raise, even though it hurt the stock price. And this is a very interesting one because you can see that based on where the stock price is going to be, when it expired, that determines how much dilution we're going to have as shareholders. So what do you put into your valuation model? So I decided to put in the worst case scenario, which is that we're going to reach $12 and then we will have to dilute with 22.9 million shares. But keep in mind, maybe we will only be at $8 and then we will not dilute with any shares. So that's pretty amazing if you ask me. And by the way, just to not keep you waiting, in the valuation model, the difference with this dilution, like the stock price with or without the dilution, it was less than $1. I don't know the exact amount. I can maybe show it in the video, but it was less than $1. So not very significant at all. So I want to show you the valuation model. This is the one. Sorry, this is the one that is Google Sheets. And again, if you join Patreon or the YouTube membership, then you just click here, you make a copy because you can only see this, not edit it. So you make a copy, you name it whatever you want to name it, and then you save it, and then it's an editable version for you. So in this model here, you see some calculations that I do about past quarters and gross margins and whatever. This one is not so important. What's important is here my yearly estimates for rocket launch and space systems. And 2023, I had to update it because, yeah, it used to be an estimate when I first started with this table. And here you can see in 2024, I am calculating with 22 electron launches, not calculating with a neutron launch. Then we can also look here. In 2025, I'm calculating with 25 electron launches at 7.5 million a pop. And we already heard in conferences that they are raising the price to 8.1 billion. I don't want to change it here because, you know, maybe they missed some launches or, you know, whatever. These numbers are anyways inaccurate. And therefore, it's better to be on the pessimistic side a little bit. And I'm counting with 2 neutron launches, even though in their model, according to Adam Spice, they have 3 launches. I'm calculating with 2. Then I'm calculating with 4 launches in 2026 and 30 electron launches. And again, Adam Spice said that they are probably going to scale with 3 and then 5 and then 8. So I have 2 and then 4 and then I have 6. So I have much lower. And remember, the Neutron is a $55 million launch. So it would be an extra $100 million in 2027, $110 million to be more precise, which is quite a difference, okay? Then I tap out, or cap the Electron launches at 35, and I'm only increasing the Neutron launches. And this is also something that Adam Spice has actually said, that it's the mid to high 30s where they have the limit of Electron, where they think it will the market will tap out, because Neutron is gonna eat into the Electron market, and you don't need that much Electron launches if you have Neutron. And with this, we come to, in 2030, and I do this outlook with the table to 2030, to 1.1 billion revenue just from space systems. Now, sorry, from the rocket launch business. So now, space systems, this one, I actually had to increase in my old table, and let me show you why. That is because of this one. So they didn't, when they give guidance, you can see the guidance here. They usually only give until the next quarter. I don't know why they do it like this. So they didn't officially give a guidance for the full year or financial year 2024. But in their presentation, when they went into the review of the backlog, which grew 107%, which is fantastic, here is one line that is very important for us. So we expect approximately 41% of this backlog to be recognized within 12 months, with the remaining 59% to be recognized beyond. So if you take 41% of 1.46 billion, that's like 410 billion and then some. So again, I want to be a bit more conservative. So I just rounded it up so that they are going to use 400 million. And since we know that the 22 Electron launches is going to be 165 million, then the space systems has to be 235 million, which is a very, very nice increase year on year. And there is not really more guidance than that they give also in the future of space systems. So what I did is I took a 25% growth every year all the way to 2030, which puts it to 896. And you can see the year-over-year growth for the company is 63% this year if they reach the 400 million, and then 47% the year after, and you can see that the growth slowly tapers off. Now, again, this is very conservative, because on the space systems, if they get in a billion-dollar contract for a certain mega constellation that they need to build all the satellites, or who knows what can happen, just one contract can push them way over this, and they can produce way more. And I actually think that that's quite likely that it will happen. But, it's better to be positively surprised. So when I started this table, there was 487 million shares. And I was thinking that they are going to dilute for stock-based compensation about 3% per year. And this is the yearly dilution that you can see. And I believe they are doing much better than this. So maybe I didn't think to update this, but let me just take one sec, look, because I believe in Q1, they guided for, you see, they will only have 490 million shares outstanding. So I'm actually going to update this now in the table. And I just want to show you that in 2030, based on this calculation, the stock price is $19.12 for me. Now I'm going to change this to, I realize that this is not going to work the way we want it. Okay, let me pause the video. I just set up this table. All right. right, so I set up the table because I copied it over from my Excel to Google Drive, and do the zeros look correct? Yeah, they seem to look correct. So here is where you see the share price. So now I'm going to go back. You can see it's like 40 cents to the positive side, where I was over pessimistic on the amount of shares. And here to the last one, I added in these 22 million shares. And again, it's the same thing. If I take this away, let me just show you that the price will go up from 1956 to 2030. So what is that? An 74 cent difference with this convertible offering for the stock. So I'm thinking within 2030, let me explain this because this is one of the most important. It's very nerdy, but important. And a lot of people don't watch these videos, which I think is really weird because these are the most important kind of videos when you analyze stocks. And yeah, so let me know in the comments if you're still watching. I want to know who is it that watches these videos to the end. So the operating margin, I'm thinking that they're going to have a 15% operating margin. And with this amount of fast growth, I think a PE multiple of 40 is very, very, very reasonable. This could be that the PE should be more. It depends on what the interest rates are, how the market is at that time. But I think it's very, very reasonable. I just want to show you if the profit goes to 10%, the share price goes to 13. If the profit goes to 5%, the share price goes to 6. So what their actual profit number is going to be according to Wall Street has super much to do with their valuation. And by the way, it might be that their profit is going to be bigger than this. And I'm not thinking with any space infrastructure, which we know is the goal of this company. So that one currently is just a call option. I believe that if it's a good workable model, it can basically, whatever the share price is, it can like triple or quadruple it in a very short amount of time. Like they just need to show proof of concept. So I'm not even thinking, so this is how pessimistic this calculation is. So again, if you feel that the multiple is 40 is too much, you can change it to 20 and then it half the stock. Or if you think it's too little, you can change it to 60. And then this is a $30 stock almost, but I'm going to keep it at 40. And that gives me a future market cap of 12.2 billion. And you divide that by the amount of shares here that is going to be outstanding at that time. And this is how we get a share price of 1956 in 2030. But we need to discount that to today. And normally I like to aim for a 20% return on my investments per year. And I know that that's quite high. And, it's probably like just a little bit less than Warren Buffett does. But in my opinion, it's better to aim for a very nice return because then maybe you get 15 and you will still be very happy. But if you're not even aiming for it, you're never going to get that. So I discounted back through the years to $5.12. And that's what the stock price would have to be if with this pessimistic calculation, you want to get 20% compounded per year. But the current stock price is 4.2. We just had all these red days, and that represents a compounded annual return up to 2030 of 24.58%, which is ridiculous. So while the stock price fell from $6 in Christmas, where are we? So here it is. So we were here on Christmas. The company has less bankruptcy risk. It has way more money on the balance sheet. They have closed, the SDA contract. They're executing, things are looking very, very good for the company. And I had to update things on my table to the better. Like Space Systems is doing better than I thought. There is more rocket launches than I thought, less shares than I thought. So while the stock fell 25%, the table is actually showing that the company is doing better. So I'm still a firm believer. Unfortunately, I can't buy more Rocket Lab because I have even more than enough for myself. But I hope some of you, this is not financial advice, but can, put your emotions aside and, do what you need to do as a long-term investor. But I'm 0% worried about the stock and can't wait for the next rocket launch. And I believe in this team. And I believe this will be my next Palantir investment. So thank you so much for watching. Please let me know in the comments. I really want to know if you watched this video to the end. And I'll see you in the next one. Ciao, ciao.